Hey, everybody. Mike Hoffman, Eric Feldman back, Longhorn Investments. We're making these little videos here to discuss different topics that's going on right now in the real estate world uh, under the new world that we're in, the new landscape with the coronavirus. So last time we kind of talked about, excuse me real quick. Sorry about that. I had to close the door. Had to talk about we're talking about the process of buying and selling real estate, and under the new landscape that really we want to just say, listen, you got to be patient. You got to have some kindness, some compassion, some understanding about what's going on. Title companies, appraisers, surveyors, people who are working from home, recording in different counties. We touched about that a little bit. Talk about the COVID-19 clause. It's available in some states, allows you to extend the period of the closing due to the virus that's out there right now. If anybody or if any third party affected with it can delay, you can delay the closing of your transaction or even walk away from it. So we talked about that last time. So this time we want to talk about pricing a little bit. And when we mean pricing, we mean the value of properties right now. So Eric, what are we seeing right now as far as valuation of properties, right? And this is going to dovetail us into our discussion a little bit about comps and appraisals.
So right now, the values of properties are still relatively the same as what they were pre-pandemic, because when people are selling right now, they're basing their stuff on comps, right? On past sales prices. And so we're relatively new into this new world that we're living in. And so if you're looking back in early March, February, January, prices were at a certain level. And, what we think is that these will start to tail off and dip a little bit. But right now, prices are still staying what they were pre-pandemic.
Well, what you're saying is that the comps are still staying the same as what it was. Because what a comp is, it is a look back in history of evaluation of a property, right? And so typically our people are looking 6 months. We want to look at 6-month look back.
Right.
Sometimes a 12-month if you're in a more rural area where you can't find a more recent comp. But that's comps. That's, hey, what the property should be worth, right? But if we want to talk about actual pricing of homes, that's what I want to get into you about a little bit. Like, are we seeing houses are still being listed based on the comps, right?
Right. But the problem is it's just starting to come in now where the situation has changed, right? So if you list a house right now, the trouble is what we're thinking is maybe prices went down 5%, 10%. Already, right? That's what we see as lenders. Some of the deals that are coming through on our table now, we're already seeing price drops on some of the things that we look at. But in what I'm kind of mixing terms on is that if we go get an appraisal done on one of these properties, right, that's not reflected in appraisal because they're looking at. It's almost like when you talk about stocks, past performance, right? They're looking about what happened 1 month ago, all the way to 6 months ago, and the pandemic wasn't a thing 3 months ago, and so these comps may not match up with the new reality. And that's what
right. And that's what we here at Longhorn are looking at properties and saying, look, just because you've got comps doesn't mean that's the value of the property anymore, right? What's happened has been unprecedented, right? We've never seen the economy fall off a cliff with little to no warning, right? And so since the economy has taken this dip, or really forget dip, it's a dive, right? They went straight off the high dive and went straight down. So since the economy did that, we think that housing prices, which are a lag, it trails. It's not in real time like the stock market's kind of a real time thought process of things. We think though that the prices are going to go down, and there's a couple different reasons for that, right? One is that 17 million people just filed for unemployment in the last 3 weeks, not even 3 months, 3 weeks. So there's going to be fewer buyers out there, right? That's one big reason. I think some of the other reasons is just that I think some people are nervous putting their property for sale, and people are nervous about buying a property right now.
I think that's true across the board. I think I saw a stat that in all the major counties, at least in Texas, the listing price or the properties that are for list right now are down anywhere from like 10 to 30%, from what they were last year, right? Because nobody thinks this is a great time necessarily to list their property unless they're in a different kind of situation, which maybe you touched on. Maybe the job situation makes people have to sell the property right now, and that creates opportunities for our borrowers, which is a sad situation, but sometimes these kind of situations create opportunities.
And so that was the next question I was going to ask, right? Is that is now a time to buy?
Great question, $1 million question. So yes, I think
Well, I think really the answer it depends, right?
Well, yeah, I was going to get to. Depends on the numbers of the deal and depends on the deal, right? There's never necessarily a bad time to buy. We want to make sure the deal makes sense, and that's always what we look at. So if the numbers work and it's a good situation, then yes, I think it's a good time to buy. You just need to consider that, as we've discussed in kind of a past talk we've done, that things take a little longer now. So you just need to make sure if you're going to do a deal, can you sit in a little bit longer, whether that be from a contractor perspective, closing, flipping it, refinancing it, all of it. You may have to have a little more patience in that. And so then you may need to have a little bit more cash, to be able to handle being in the property a little longer than you used to.
Yeah, I think that's a great point. I think, look, we've all heard the saying cash is king, and I think never more so than right now, because you've got to have the reserves to stick around and anticipate that things are going to take a little longer. Now, like Eric said, on the upside, though, I think that, quite frankly, is if you find the right deal, you can buy at the right price, right? I mean, you make your money on the buy, and if you're patient and smart about it, I think there's deals to be had out there.
Absolutely, and we're seeing those every day. Got a couple calls today where the margin was wider than I've seen, in the past 6 months of potential profit. So that's exciting, and the borrower was in a position to be able to do that because he had some cash. So we like those kind of borrowers.
Yeah, those are our favorite kind, right?
Yeah.
So anyway, I guess so. To sum up today, right, or our little quick videos that we're doing right now are our educational series or topical series discussions on real estate in the world of coronavirus. Is that look, you need to be careful about the comps. You need to be smart about your pricing, and you need to realize that the market has changed very, very, very quickly. But understand when you're talking about comps and talking numbers, you know what that means. And that's a look back, and that might not be reflective of exactly what's going on today. So anyway, that's going to do our talk on that. And join us next time. We're going to have a discussion on our favorite topic, which is lenders. And what lenders are doing right now, what lenders are still lending, and what the approach that they're taking. So you can best educate yourself out there. Thanks, everybody, and stay safe.
Talk to you guys soon.